This podcast is not legal advice and should not be relied upon as such. You should always obtain legal advice about your specific circumstances.
Hello and welcome to Tax Records, the Hall & Wilcox Tax Team's podcast series. My name is Frank Inopoulos and I'm a partner in the tax team at Hall & Wilcox. Today I'm thrilled to be joined by my colleague Jim Kutral-Kostas, a fellow partner in the tax team based in Sydney. And what we're going to be talking about today is the current payroll tax crackdown. It certainly is the case right now that there are more and more reviews and examinations being undertaken by state revenue authorities into payroll tax compliance and payroll tax issues. And we are seeing more and more cases being heard in the state courts and tribunals. And a couple of the things that we will be covering off in today's podcast will include looking into payroll tax and how it applies in the context of employment, particular industries that might be focus areas for the state revenue authorities for a payroll tax review or audit, and also some broader issues around payroll tax that business should be aware of. So welcome, Jim. It's great to have you with us.
No, thank you very much, Frank, and glad to be here with you talking about payroll tax.
Excellent. Well, Jim, I do know it's an area that you have a special passion for, so I'm looking forward to our conversation today. So, Jim, how about we start with you telling us a little bit about payroll tax and how it might apply in an employment context?
No, for sure. And as the name would suggest, payroll tax is a tax on wages and salaries that you may pay, that a business may pay. And that's why a lot of businesses see this as being an inefficient tax. So a lot of businesses don't like the tax because it's a tax on effectively employing people and paying wages and salary to those people, because payroll tax is a function of how much salary and wages you pay.
And Jim, so does that mean and does that count only salary and wages paid to employees?
And look, you'd think that'd be the case, and that is the most common scenario that people think of. You know, your normal employee-employer relationship under an employment contract, but it is payable in those scenarios, and it's payable with respect to wages and salary, but it's also payable with respect to super, fringe benefits tax. May also be payable with respect to employee share schemes and employee option schemes. But it's not just the employment relationship that we need to have a look at. It can extend beyond that.
Right. And one thing we hear a lot about is contractors and just how complex it is to work out if a person is an employee or if a person is a contractor, and if they are a contractor, whether they can be deemed to be an employee. Does payroll tax reach into contractors as well?
It certainly does, Frank. It's probably the one aspect of payroll tax that's being focused on at the moment is the payment of payroll tax with respect to contractors and payments being made to contractors. And effectively, payroll tax gives us the broadest definition of what a worker is, or who a worker is, and what payments would be subject to payroll tax. So most contractors, unless they fall within a particular exemption, may be subject to payroll tax. And I should say that who is a contractor is quite broad. And I guess the rules look at contracts under which a contractor supplies services for the performance of work. It can be as broad as that. And where there is that kind of contract, and what we would call a relevant contract, the principal is deemed to be an employer, the contractor is deemed to be an employee, and the payments made under the contract are deemed to be wages and subject to payroll tax.
Sure. And I think the whole question of contractors and when they are an employee could be a half an hour podcast in and of itself there, Jim. So I won't take you into that detail here, so we can focus on the payroll tax bigger picture. But tell us, if you will, please, what particular industries have been the target of payroll tax review and audit activity in recent times, and what is it about those industries that has made them a target?
For sure. And I think I'll answer the second part of your question because that leads into the first part of your question. And it comes back to this contractor problem because the revenue authorities have been focusing on contractors. They're looking at service type arrangements or service entity arrangements where service entities use contractors to fulfill their contracts, to fulfill work that's required to be done. As a result of that focus, what we've seen in the last couple of years is an uptick in activity by the state and territory revenue authorities in reviewing and auditing medical practices and other healthcare practices. So, for example, GPs, optometrists, dentists, those medical centres that you see in shopping centres where you may not have the same doctor on each of the visits that you make to that medical centre. They're the kinds of practices that the revenue authorities are currently targeting.
And what is the what do you think is a particular focus area of some of these cases, and what have we learned from some of the cases that we've seen handed down in Victoria or elsewhere?
That's right. As you mentioned, Frank, there's been a recent spate of cases that relate to the industry, and it effectively started with a Victorian case called Optical Superstore. And you may have seen an optical superstore store in a shopping centre. And I guess in that case, the facts of that case or what was in issue is effectively how Optical Superstore would enter into arrangements with their optometrists. So Optical Superstore had agreements with optometrists that saw patients in the stores of Optical Superstore, and the patient fees that were earned by the optometrists would be collected by Optical Superstore, basically at the counter when you'd go and pay for the services that have been provided. At the end of each month, the patient fees would be collected and would be remitted to the optometrists, but Optical Superstore would retain a fee for providing the premises, for providing support services to the optometrists. So Optical Superstore wasn't actually providing optical consultations. It was the optometrist in that store that was providing that consultation. It's just that the optometrist was using the premises of Optical Superstore to conduct that consult. Now, what the Victorian SRO said was, well, hold on, those payments that are being made by Optical Superstore to the optometrists are deemed wages and they should be subject to payroll tax. And the case made its way right through the High Court, and the Victorian SRO was the winner. Basically said that payments made to the optometrists, effectively of their own patient fees collected on their behalf by Optical Superstore, were subject to payroll tax. So, that sort of sent a shiver down our collective spines, because what we thought was a common arrangement amongst a lot of medical and healthcare practices was now being targeted. We were thinking, who else could be caught? And what I would say is, initially, we thought, well, hold on, Optical Superstore is a special decision. It's confined to its facts. This doesn't apply to many other service type arrangements.
And I think, as you say, Jim, more and more we're hearing about the increasingly fragmented, working economy and the gig economy and so on and so forth. So we can, I think, only expect these kind of issues to continue to be looked at and to continue to be controversial. So,
for sure, that's exactly right. And I think that controversy, I guess, was further heightened earlier this year. So, and again, in the medical practice, you'd think that a lot of the suburban GP practices that you would see wouldn't be caught. But then we also had this other New South Wales case called Thomas and Naz, and this is only a few months old. But even in that instance, where you had, I guess, a more typical service entity type arrangement where payroll tax would apply. Again, Revenue New South Wales was the winner. Payments that were made to the doctors by the medical practice were subject to payroll tax, even though the payments were from Medicare claims made by the doctors. So effectively, funds owned by the doctors or owed to the doctors were subject to payroll tax because the service entity, the medical practice that was running the consulting rooms and providing the admin services, was making these payments to the doctors. So again, we're having this broadening of what arrangements may be subject to payroll tax.
So following on from that, Jim, I mean, what sort of industries, what sort of businesses might be next in line for reviews such as this?
Yeah, look, I think that's the concerning thing, Frank. I think it's we're seeing the revenue officers becoming emboldened, and these kinds of service arrangements aren't only seen in the healthcare industry. What we're seeing from these cases is effectively, any practice, any business that requires the services of contractors for its business to continue operating may be subject to payroll tax. In those two cases, in Thomas and Naz and Optical Superstore, what we have is, in those instances, the medical services provided by the doctors or the optometrists were essential to the taxpayer's medical centre business of operating a medical centre. So without the medical services provided by doctors to their patients, the taxpayer couldn't operate its medical centre business. So in effect, the doctors provided their services not only to the patients, but also to the service entity. And put simply, payments from the healthcare practice to their contracted practitioners may trigger payroll tax. So you could just imagine that wouldn't be a stretch for the revenue authorities to begin targeting other industries and professions where there are similar arrangements. So, you think about, engineering firms, think about financial advisors, financial planners, think about accountants, think about even barristers. Now, I'm not sure whether you want to target barristers, but they have a service kind of arrangement with chambers where that could potentially be subject to payroll tax or subject to the focus of the revenue authorities going forward.
Yeah, well, don't know if there might be a hint of Schadenfreude about targeting barristers there, Jim, but I think, the points you make are all very good, and we can see how that general pattern or business model can apply in lots of other industries like those you've outlined. So if somebody listening has a client who, having heard us today, thinks that they might be a risk, what are some of the practical things that they can do, and what would you suggest that they should be the action they take?
No, for sure. I think importantly, you need to review your service entity arrangements. The time is now to do that. The revenue authorities are honing in on this. Each business needs to look at their admin service arrangements, consider the hiring of contractors, consider how those contractors are paid. Is there another way of potentially structuring the service arrangement so that it isn't subject to payroll tax? This isn't something that should be subject to payroll tax, and traditionally it shouldn't be something that's subject to payroll tax. But because of these decisions, because of the lack of clarity as to how the rules work, the revenue authorities have been emboldened. So I'd say have a look at your admin service arrangements, have a look at the wording of your service agreements. That's important, but even more so are your day-to-day operations. So is there anything that's being done on a day-to-day basis practically that we need to have a look at and tweaked, because they could also be seen as factors pointing towards an arrangement that would be subject to payroll tax.
Brilliant. Excellent. Thanks, Jim. And so we've talked about the issues around payroll tax and contractors, and that being a particular focus of the state revenue authorities in recent times, and the litigation that has happened around that. Parking that just for a moment, What are some of the other hotspots or some of the other issues that business needs to be aware of in payroll tax?
Look, that's the contractor issue is a big one at the moment, but there are still a few other issues that the revenue authorities are looking at. And the first one I'd mention is grouping. So if businesses are grouped as part of a payroll tax group, then the group is only entitled to one tax-free threshold. So if businesses aren't grouped, then each business is entitled to the tax-free threshold. But by grouping, the revenue authorities are effectively denying each business the ability to use the tax-free threshold, and the tax-free threshold only applies to the group as a whole. But other than the tax-free threshold, importantly, if members or businesses are grouped, then group members are jointly and severally liable for each other's payroll tax liability. So what that means, and this is quite important, what that means is that the full payroll tax liability of one or more businesses in the group can be lumped onto any one entity in that group, and that could be financially disastrous for that entity. It could make them become insolvent, really. So it's important to know how you can be grouped and whether you can apply for an exclusion for grouping. So that's one issue. I think the other issue is making sure that if the contractor provisions do apply to you, making sure whether there's an exemption that applies to you, and making sure that you fit within that exemption effectively on all fours, because the exemptions can be quite narrow. If you don't fall within an exemption, then businesses have been caught out and they can be hit with retrospective payroll tax assessments as well.
And no doubt that can be massive, and as you've pointed out, can have disastrous financial implications for businesses that get caught up in this net. And if I can just ask you two quick things.
Sure.
So when you talk about payroll tax thresholds, can you explain what that means and where those thresholds sit at the moment?
Yeah, for sure. So the threshold is effectively if you pay wages in a year that's under the threshold, then you don't pay payroll tax. So it's only once you pay wages above that threshold that you're subject to payroll tax. Now, the payroll tax thresholds vary from jurisdiction, vary from state to state. In New South Wales currently, it's around the $1.2 million mark. So you have to pay wages and salaries above that threshold so before you start paying payroll tax. In Victoria, for example, it's 700,000. But in any case, they're about around that number across the jurisdictions. Now, in terms of grouping, what that means is that if you have three businesses, for example, each one of those businesses would have to pay in New South Wales more than $1.2 million worth of wages before they start paying payroll tax. If they're grouped, then it's the group as a whole that's entitled to that tax-free threshold. So across those three entities, across those three businesses, you could have up to $3.6 million worth of wages payable before you start paying payroll tax. If those three businesses are grouped, then as soon as you hit that $1.2 million mark across the three businesses, you start paying payroll tax.
Thanks for that great explanation, Jim. So I want to give you the last word, and that is what should businesses be doing right now to try and deal with some of these risks?
Sure. I think, first of all, make sure you understand your payroll tax obligations. The revenue authorities are stepping it up. Just know what the rules say. Make sure you review your payroll tax arrangement. Make sure you review your arrangements. Make sure you review your arrangements with contractors. Make sure you review your service entity arrangements, particularly if you operate in that kind of structure. Have a look at admin service arrangements. Have a look at the hiring of contractors, how they're paid, and see whether there are any payroll tax impacts as a result of those arrangements Have a look at your agreements, have a look at your day-to-day operations, get advice, seek advice. If you're not sure, make sure you pick up the phone and ask. I have to say that the revenue authorities can be quite aggressive. At the moment, they are being quite aggressive, and they're not afraid to take up the fight, to take matters to the tribunal, and to fight it all the way to the High Court. I think the pandemic has burnt a hole in state revenues, and I think this is one of the ways that's being used to fix that to some extent.
Excellent. Well, thank you very much for your wisdom and insight there, Jim.
Not a problem, Frank.
Very much enjoyed having you as our guest today.
Perfect. No, thank you very much for that, Frank. And if any of our listeners have any questions, please feel free to send us an email, give us a call, and we'll be sure to assist you as we can.
Thanks, Jim. And to everybody listening, we really hope that you enjoyed today's episode. If you have any questions about what we've discussed today, please contact a member of our tax team. You can find our details on the Hall and Wilcox website, www.hallandwilcox, HALLANDWILCOX.com.au, or you can connect with us on LinkedIn. Next week, we'll be discussing cryptocurrencies and NFTs. There's a lot of hype about this at the moment, but we really want to understand what the tax implications of these things are. So we hope you'll join us for what will no doubt be a very exciting and illuminating discussion. If you have any questions about payroll tax or the ATO's crackdown, please again contact a member of our tax team. If you enjoyed today's podcast, and we hope you did, please rate and review and follow our podcasts using whatever service you use to listen to podcasts. And you can subscribe for this series on our website to be notified of new episodes. Once again, wonderful to have you all with us, and look forward to speaking with you next time.